Okay, and we're live post New York City, Roy.
Post New York
How's it
City, post mortem on PayPal, post most epic earnings ever on Palantir, and
Yeah,
post I got to get my air test systems note in there somewhere, and I don't know what to say. There's a lot
and
to cover,
post
man.
post us all living under a fucking bridge after this drawdown. It's
Oh,
no bueno,
okay,
senor.
okay. You want to know something stupid and
Tell me,
crazy?
tell me.
Um, so PayPal did horrible today, and we'll talk about PayPal. We'll talk about Palantir too. My main portfolio, I mean, like more than half of my investment stuff is in it, was up today very slightly. And I'm like, okay, thank you, VG, Air. Like, there's a lot of contributors, but I'm like, oh, I was not expecting that. And thankfully, this happened on a Tuesday, one of the busiest days for me. But yeah, this is in part PayPal therapy tonight, but we're going to talk about a range of topics. Tevis, you want to share anything on the meetup?
New York City was great. Michelle, I see you in the chat. I just made you a mod as promised over the weekend. Yeah, man, a lot of people commented on Bootleg. I was surprised. They said, you and Roy have great chemistry. We love the question and answer period in particular. And yeah, we met quite a few fans of Bootleg. And that was really rewarding. I think everybody missed you. And you were like the number one guy that was missing in New York City. But I understand why you couldn't be there. And it just means that we have to come to Houston all the sooner. Yeah,
Yes.
lots of pictures, lots of chats. My voice was gone, dude, by the end of it. My voice was absolutely toast. But it was great meeting a lot of people. If you were at New York, then just let me know in the chat, and I probably remember your name.
Yeah, it seemed like there's a lot of people there. I recognized a lot of faces, and then some faces I didn't recognize, but names. It seemed like it was a really cool time. So, yeah. Funny thing is, my wife literally asked me yesterday. She's like, "Have you? Do you have any like trips planned for like investing stuff? Like, you should go." I'm like, "You trying to get rid of me? Like, what's?" And of course, I just missed because of other obligations, the meetup. But yeah, maybe next time. All right. Well, thank you guys for watching and being here today. This is Bootleg Weekly. If you're a new viewer, basically the way it works is we have a select list of topics that we kind of stick with. It's bootleg, so we kind of do what we want. We're here because this is fun. It's great to interact with you guys in the audience. And on that note, we will answer questions that are usually related to the topics we're doing. And we will, of course, have Q&A afterwards as well. It can be unrelated to anything that we discussed. But as always, we'll shoot you straight with what we think. And oftentimes that answer might just be, I don't know. So anyway, thank you guys for being with us tonight. Tevis, between PayPal, Palantir, and Air Test Systems, which is probably the shorter topic, which of the three would you like to hear about first that we can talk about?
Maybe we can start off with the good news with Air. But first, I just want to say I already have 7 questions bookmarked, and it's been 3 minutes that we're live, so you guys all know the drill. Second, Staples, I think your name is Curtis. Staples Roy was a 20-year-old viewer, and he had a portfolio under 100K, but he had, I think, like 13 or 14 positions. Yeah, Caleb. Caleb, and I told him, and he's like, do you have any advice? And I was like, dude, cut your positions. Like, you need to be under 10 positions. Would you agree with that advice, Roy?
I mean, like in general, I think it makes sense to have a very concentrated portfolio. If you have, and there's a couple of reasons for it. One is otherwise just invest in the ETF, right? Pick one that you really like, go with that, and then focus on making money and putting it into that. That's not a wrong approach at all. Like just invest in the SPY, just invest in the QQQ. Alternatively, if you want to hold a lot of names and you actually want to stay up to date in your portfolio and opportunity, you need a lot of time, now, some level of due diligence, you don't need to do like the same level of like a Tevis or me or something, but you have to do some. And if you just can't, if you find yourself getting lost in the mix, and it's easy to do beyond 10 names, that's dangerous as well. And then the last is you really, for investing, you want to concentrate in your core convictions. That tends to beat, unless your core convictions are on like PayPals of the world, that tends to beat out performance, even when you do have some bad picks. And so, you might be like we talk about a lot of companies here, and I'm like, yeah, I think like Zeta is one of those. I think it's a good opportunity. And I did talk to somebody that they've made it bump up the ladder a little bit for me, but it's still, I'm not sure it's a great opportunity. You can invest in good opportunities, you do you, but you should probably invest more of your money in the great and excellent opportunities, and you will make more money over time. So anyway, that's my quick spiel on that.
I agree. And we do have so just want to answer this. The record is 35 questions. That is not the record. That is where I draw the line, because otherwise we're going to be here all night. We're already up at 10 questions, guys, and we haven't even started the show yet. And before we start the show, there is a special guest backstage. And yeah, and he's not, I think he stood up and he's getting a drink or something. But when he's ready, we're going to bring up our special guest on this show. Roy, are you ready?
Yeah, maybe we talk PayPal then, because I know that's why he's here, at least in part. Just a little quick note on PayPal he wanted to share too. But yeah, let me pull up the IR. Well, here, I'll share my screen. That'll be easiest just to start this with that. And
the special guest, everybody, is none other than Mr. TJ, the Wheel Deal. Hey, TJ.
All right.
What's up, guys? How are you?
Good, man. How's it going?
Doing great. Yeah, TJ's a good friend, very different investment strategy. Brilliant guy, nice guy, and also in Texans. So yeah. Despite the New Yorker hat, like, what's with that, man?
I love the Yankees. I love the Lakers.
Nothing wrong with that.
I love the Cowboys. I'm a front runner.
So TJ and I were shooting a couple of messages back and forth from PayPal today, and we've not really gotten into like what happened. But before I go into what happened, and I think I think you just have a select amount of time. Let me just show the chart and just briefly comment on that, and then TJ, I guess you can kind of share your perspective, or at least what we talked about as much as you want today. So here is the year to date. If we look at the last 5 days, I mean, you just don't want to see this with stocks that you hold. This is a huge drawdown of 20%. I didn't think we'd see PayPal in the 40s, barring just like revenue slowing down to nothing, which is pretty much what we got. So we'll talk about the results a little bit. This was a thesis breaker for me, just as a primer. I exited today. I'd been thinking about what would cause me to exit, and this was worse than my worst expectations in terms of what would have caused me to exit PayPal. So it wasn't a hard decision for me because I put in a lot of thought. It wasn't based on emotion, wasn't because of the stock price. It just like the execution was not there. And so there is that approach, as far as like, hey, just exit completely. And TJ and I will talk about this, at some point down the road. But TJ, what were your thoughts on PayPal, and then the aftermath? Like, what are you doing about it?
Right. So I woke up this morning. I've been following Roy's coverage on PayPal for over 2 years, probably. Might even been more like 3 years, I think. So Roy's been like my go-to source for PayPal due diligence, if you will, because the beautiful thing about this YouTube space, the financial space, is you get to meet a lot of really smart people in the investment space, and that really helps shave a lot of time off of your hands, because we all have a finite amount of time per day. And man, Roy has just done an extraordinary job covering PayPal. So we've been in and out of PayPal over the years, and it just started getting very, very attractive again from a valuation perspective, because it wasn't that long ago that I remember things on X, like it's no longer PayPal, it's PayPal, because it had hit $100 not too long ago, right? Like, I don't know, what was that? Less than 6 months ago, maybe, that it hit $100.
Not that high, but yeah, it was up basically double from here.
Yeah. And I had purchased some leaps back in the day and done a swing trade on some shares, and it had gone very, very well. So my experience with PayPal has been very good. So then it came back to levels that it really got my attention. I think it had something like the PE ratios were like 10 or 11. You know what I mean? Like it was like pretty cheap from that aspect. And I was like, well, last time I checked, because when you sell a company, you kind of stop, or at least I tried to stop following it because I feel like emotionally you beat yourself up, right?
Yeah.
And I didn't want to do that. I didn't want to like be the guy that it's my idea to end the relationship, but you're going to stalk her every move on Instagram and Facebook and whatever the heck other
Exactly.
Pinterest. I don't know, whatever the hell she be on, right? Like you're just hurting yourself, right? So I was like, when I sell, I try to forget for like, I don't want to follow because you're just annoying yourself because now you're trying to justify your move based on price action. And I think when you're formulating an investment thesis, price action is like one thing, right? And ultimately it ends up being the thing, right? Because you buy it for a certain level and you sell it for a certain level. So people that say that price isn't important, I don't know what stock market you're in, because I've never gotten credit for having a good investment thesis. It's about where'd you buy the shares and where'd you sell the shares and all the premium in between. That's kind of the only way that I know how to make money in the stock market.
Yeah.
So people that say price isn't important, you lie to yourself, but I'm not going to buy that crap. Like price is very, very important. Valuation is very important. But I caught what Roy said on his, I was wrong. You did like a little thing. I was wrong on your channel. That valuation alone isn't enough to keep you in a stock. Your thesis is broken. I just recently sold across the board a multitude of portfolios. We sold a lot of puts on PayPal. And obviously those are drastically underwater now because what did it tank today? 15, 20%?
20%.
Yeah, 20%.
Yeah, 20%, right? I feel like it was at 55 not too long ago, maybe even 56, 57.
Yeah.
So that was around the time that I started selling puts at 50, but not like a year out. So I was like, I feel like this is going to be a transitional year. It wasn't my idea to think that this was the kind of stuff that I had heard on Roy's channel. So Roy had already prepped me in my mind emotionally to where this was going to be rough sailing for PayPal, but there was also like a lot of make or break scenarios. I feel like you were hinting on potentially exiting the position, if not in full, at least in part, because I think it was twofold. I don't want to speak for you, but I feel like it was twofold. You had other places that you thought it was just easier to make money. So you're like, do I want to like fight this battle that I may or may not be able to win? Or can I take all of those resources and let's just tuck tail and run, because we fight that battle and we win that battle. At the end of the day, it's not about the battle, it's about the war, right? So I feel like that's kind of what you were telling us in the last 2 or 3 times that you covered PayPal. At least that's what that was the in between the lines message that I was getting. Can you speak a little bit on that? Because am I off base or am I kind of around?
I don't think it's in between the lines. I think the previous PayPal video I had where I forecast the earnings was I may be exiting PayPal soon. Here's why. And then I had the instead of the normal earnings breakdown where I did have some projections, but I'm like, honestly, guys, this doesn't matter nearly as much as this stuff, and I may be exiting. And what I was thinking, like the baseline going in, and I mentioned this a couple of places too, is I figured it would be pretty weak earnings, that branded might be at 3% revenue or 3% acceleration, and it was what like let me just show how bad this was, but yeah, in essence, I was going in thinking good chance that it's going to disappoint, that they're not going to do the things that I'm expecting and wanting and needing, and so I'll exit at least half. I'll keep half just because, like, hey, it's stupid valuation. They're still growing and everything, but the thesis broke apart completely for me. Branded, well, how much time do you have, TJ?
I'm good. I know that the branded grew like 1%. Essentially, branded was flat on the year, which I think you were expecting 3 or 4%, is what you had alluded to.
Yeah, let me have just a few minutes, Tevis and TJ, and I'll show kind of what I saw and what broke for me. So Overall revenue, this is not great. This is total payment revenue, though, or total payment volume. Here's the actual revenue. 4% growth, which is really, really slow, like meaningfully slow. Not going to pull up Wkly and show all the charts and stuff. It's in decline. 3% dollar neutral. So they were helped by a weak dollar. If they weren't 3%, and if it had been as a strong dollar as it normally was, it'd be like 2 or 1%. That is abysmal. On the year, 4% total growth. That is just frankly unacceptable. Okay, now GAAP EPS, fine. They actually ended up posting less free cash flow than I expected. A decline of 3%, which is not the biggest thing. Active accounts, monthly active, doesn't matter as much to me. It is slow growth, but I mean, it has kind of been that way. But it's still a lot of growth just because these are massive numbers. These are in the millions, by the way. This right here is a big chunk of it. Alex Chris being out is another huge chunk as well. Branded checkout. So they've tried to pivot towards branded experiences, which have been growing like pretty well through the year until now. Branded experiences include PayPal branded, Venmo, payment by Venmo. So it's same take rate and buy now, pay later. And so I was expecting this to accelerate, especially with the incentives that they are driving on a lot of these channels. And instead you see 4%, and that's not even branded. Here's the actual branded. This is a number analysts actually care about. 1% freaking growth. That is scary and alarming. And then there are a few like good notes. I'm not even going to talk about those. This right here, the guidance. This, when I saw this slide, I'm like, yeah, 100% this thesis is done. And I think at that moment in the live stream, I'm like, guys, you carry it for a minute. I need to sell all my shares right now.
So you did that. You did that during the live because I was grabbing a little, but didn't the live start pre-market or
it did. It was 45.60 or something that I got out. It's like $41 and change. Low can always go lower. The thesis breaks out for me. I'm looking for that exit. Now, I was thinking in that baseline scenario, if it was not this dumpster fire of garbage, then I might look for an exit, which means, you look for an opportunity, maybe it bounces back, or if the market might even like it. And no, this was a thesis breaker. I'm like, no, I'm done. So slight decline transaction margin dollar. This is guidance for first quarter, roughly flat non-GAAP, mid-single digit decline for non-GAAP EPS and mid-single digit decline for GAAP EPS, despite the buybacks, buybacks.
Wow.
What's worse is if it's like a 1 quarter thing and they have commentary on it, maybe full year 2026 transaction margin dollar slight decline, roughly flat, 3% growth, mid-single digit decline, full year for GAAP EPS, low single digit decline to slightly positive. Now they're still doing share repurchases, free cash flow and everything, whatever. This is a business that's in decline and valuation is not enough. Buybacks are not enough. Free cash flow is not enough. Now it is if the business is continuing to improve and grow. And then the last bit is,
do they have a little dividend as well?
Yeah, little dividend. It's higher now as percent because PayPal's trading in the 40s. But they brought in Enrique from HP, who's been on the board of directors for a while. Cost cutter. He's going to lay off some more people. Not as many as probably the market was wanting. This is going to completely pivot again from a pivot. I actually think Alex Chris was right on a lot of things. And there will be like a retrospective on what went wrong and what I missed a few weeks out. I'm going to give it some time. But this is going to be transition year 2026, maybe 2027, 2028, 2029, 2030, maybe forever.
So on Alex Chris, just to stay there on your little doppelganger, I didn't hear anything on your channel that he was even on the hot seat, or was I just like doing that selective hearing that I feel like my wife thinks I do when she's talking to me?
Some people told me that they thought he was in trouble just because of the share price. And I was like, no, I don't think so. It's because the things that they're building, they take time. It's taken longer than expected. But I'm like, hey, I think that this is going to still play out. With him out, they're probably going to pivot away from that too now. So they're just, instead of being an ocean liner that takes forever to turn and they're mid-turn and starting to accelerate, now they're just dead in the water. They're in the doldrums. They have no anything. I mean, they're declining. So this is absolutely terrible. Now, probably they're still sandbagging. This is not a company that's going bankrupt. They make a lot of cash. Could it be successful in the future? Sure. Like Dr. Grather's still there. Advertising should be a layup, but they never talk about those things. They just talk about the bad. And then the last part, this isn't why I got out. Jamie Miller, the CFO.
Right.
Who
the one that was on the earnings call?
I think she's very good on the numbers and some other things. She ran the earnings call every time she talks. Every time the stock goes down. Like if you were shorting a stock or if you wanted to make money easy, like you just like, okay, when is Jamie Miller next scheduled for a fireside chat? And you just pile in shorts. I'm not being serious, guys, but like historically, you would have made a boatload of money except for one time. So, and I was like, okay, Jamie Miller's guiding this call. I need to be out now, like now, right now, because she's going to tank this thing. And she did.
So can I share y'all my thoughts? Because I listened to I was grabbing a little workout here on my yoga mat while you were covering the live with, was it Couch Investor or who was
Couch
on there
Investor,
with you? And what's his name? Amir? He was on
so
there
Neil
too?
was Couch Investor. Amir was also there, and then Juan, who covers like Robinhood as well. And first time ever being on live for him. It was cool.
Oh, super cool. So I was listening to this call and it reminded me of like a pep rally where it's like, we know we're not going to win. So we're not even going to like spend any energy trying to pump you up. We all know we're going to lose. We don't know how much, play the over, that kind of thing. You know what I mean? It's I was just like, dude, are they trying to tank the stock on purpose? Like that was literally what was going through my mind right now. Mind you, we have a ton of time on our puts and it's a different situation on Tasty Trade because one, it's not a cash secured put. That's one. So you're not tying up the entire monies. If not, I would have never gotten into the trade to begin with because the premiums weren't sexy enough. Because I have like that threshold of what I want to. And Tevis is a premium junkie. He knows what I'm talking about. If you're not, if there's no juice in the lemon, you're not going to squeeze. That's the reality of it. So the only way that there was any juice in that lemon was because of the way portfolio secured puts work versus a cash secured put. That was one. Two, the amount of time I was like, well, this is a transition year. Let me go out into the transition, pick a strike that I would be very comfortable with and see if we can manufacture the win. But all those things, if those things aren't in place, I probably don't touch PayPal because the reason we exited PayPal initially was when your boy Alex Chris acted like PayPal was Apple and they do this big old event, something like Shock the World. And I'm like, why am I watching YouTube at 6 or 7 o'clock at night, acting like a kid who's going to go to the Apple store and stand in line for 2 hours for the latest iPhone? Because I feel like that. And then it was like a big nothing burger. And they were saying things like shock the world. So I already had it like on a real short leash at that point. Fortunately, it worked out and it was a real nice win. But I was just like, I feel like you kind of like annoyed Mr. Market with all that hoopla and rah. And maybe that's why this Miller lady was like, well, we're not going to go do that because the market didn't receive that very well a couple of years ago. But now it's like, I mean, this lady did. It looked like she wanted to be everywhere but there on the earnings call.
So yeah, I can't remember if I told this live or not, but I was talking to just one of the guys afterwards, and I was like, honestly, if they just played like Barney Hill music the entire earnings call instead of actually doing the call, I think the stock would have done the exact same. They didn't need to say anything, and they dodged analyst questions. Like it was just like terrible. I saw zero.
Tevis, what are your thoughts on it? I have not heard you talk about PayPal in probably a long time. I know Tanner was covering it. I haven't had a chance to go and see what his thoughts on it, but I feel like the writing was on the walls. And I alluded to it on my channel. I was like, the resident bull is getting bearish, which is Roy. So it's a sign of two things. This is really, really going to go bad, like south really bad, or we're close to the bottom. You know what I mean? To where you can shake that kind of conviction, because they shook your conviction. I feel like that happened 2 or 3 weeks ago, or at least that's when you divulged it on the channel. So obviously I thought the floor was 50. I didn't realize the house had a basement that could be probably 35. I don't know.
Yeah, look, there's just a couple things I'll say about PayPal, and then we can move on to something more exciting. First, I think Roy has been on the nose for PayPal all along, and I even posted in January a little calendar reminder for myself, saying that hey, PayPal Q4 could be really good. Like, is this time to buy? And I think it's just a good lesson in that of however cheap it is. And same thing with hymns right now. Like somebody asked me earlier today, they're like, "Hey, are you adding more hymns?" And I was like, "I think from a technical perspective, it's kind of bottomed or getting close to the bottom, but I still want to see what the earnings are because I would rather buy 20% more expensive and know that they're going to be fine than just YOLO in the dark, you know?" So that's the first thing I'll say is like, hey, earnings is confirmation because you get all their numbers. And as it just so happens that, they reported earnings fell 20%, and cheap can in fact get cheaper. The second thing I'll say is that, look, the market, there's been nothing to move this freaking thing. Last quarter, they reported earnings. They announced that deal with OpenAI. They pumped and they gave it all up intraday, not even throughout the week, intraday. Alex Chris, he started off with like shock the world and he was going to take the company back into growth mode. And that's largely not played out. I don't know how the new guy is going to be perceived, but it seems like Alex Chris was just straight up fired. That's not great for his reputation. And it kind of makes sense now why he was dodging all of these retail investor interviews. I remember we called him out, Roy, and he's sort of been completely radio silent. And in the beginning, he was doing more appearances. I mean, with Roy and also with others. So there was a little bit of trouble in paradise, let's say, from a management perspective. New guy is going to be probably doing a lot of cost cutting, a lot of like the traditional turnaround tactics to adjust the OPEX and then make the numbers look slightly better. But I mean, I think Roy nailed it. Like, there's no growth. And if there's no growth, then what are we going to get excited about? I think the more interesting nuance of this conversation is not necessarily that like, hey, PayPal is dead money because it's been dead money for years now. The more interesting thing is like at $40, bro, who is going to take this thing private? And that's the thing that I posted today is like, this thing is too cheap to ignore, not from me or you, from a retail investor perspective, like, oh, stock could go up. But it's like, this is going to be too cheap to ignore for somebody to just pick it up for pennies on the dollar, completely absorb it and maybe restructure it, or for themselves to take themselves public. So I think a buyout is probably more likely now than it is before, especially because like I think the reaction to Alex Chris has been generally negative. So if they can't go the growth route of like, hey, we got to bring in some hot shit CEO to grow the company and turn it around, then it's like, okay, well, we're going to sell for like, it's going to become a parts shop essentially, or for themselves to then go private and then go through that route, not be at the whims of the public market. So I think I'd love to hear your guys' thoughts on that. Like, do you think acquisition / take private is way more likely here than before? And do you actually think that that's going to happen? Because that was my first thought when I saw this thing trading at $40 billion.
Yeah. So can I go first, Roy? Because
yes,
I've been listening to some Candace Owen because my wife and I are trying to solve the Charlie Kirk murder. Okay. And she's the only one talking about it. So I'm on these little conspiracy kicks right now because this lady goes down some crazy rabbit holes. So this is a rabbit hole that I went down in my mind with a couple of members from our WhatsApp group. The idea behind the PayPal trade was, one, we could collect enough premiums to where a $50 strike would ultimately be like a $40 cost basis. And then at that point, it's like Benjamin Graham's book, The Intelligent Investor, Valuations Matter, right? I just feel like at some point that valuation gets very, very attractive if they've never experienced the pain from PayPal, riding it from say 200, 300 back in 21-ish, all the way down and down and down and down. Because that's when it first got on my radar, was right after COVID, and it was flying high, probably in the almost $300 range. It might have even crossed 300, and then it was 200, and then it just kept falling and falling. And then when 100 happened, that's when it got my attention for the first time. So that was, I don't know exactly the dates, but I feel it goes around 2022-ish, give or take, right? And y'all can pull it up with your fancy little charts over there.
That was.
But anyway, I went down this rabbit hole of how would PayPal make sense at 50, adjusted cost basis 40, right? So I mean, you call these conspiracy ideas. Let's just call them an idea, a pie in the sky fireside chat between two people drinking a beer, even though I don't drink. Let's call it a root beer because I won't ever drink alcohol. We concluded that Elon Musk was going to buy PayPal for X because he ultimately wants to turn X into a one-stop shop of sorts. And who better to buy PayPal than the person who helped create PayPal, because he was part of the PayPal mafia, right?
Bro, it's Steve Jobs coming back to Apple round 2. I don't know if Elon wants to do that, if he wants all that baggage that comes with that, with the bloat. But like, I could see it. I think for the plot, it might work. Also, I think a spin-off of Venmo or a breaking up of the company might also be in the cards. But yeah, sorry, go ahead.
No, but I'm just saying that was a big part of it, because I feel like somebody will come in and freaking do like a hard floor, because it's a lot. Like, I was in Twitter whenever it got bought out by some Elon Musk. You remember that? And then they announced the share price and helped me out, but I feel like it was $10 above where it was trading. And then Twitter gravitated towards that price pretty quickly, because I remember putting cover calls at that acquisition cost, or at the acquisition cost of Twitter. And I feel like it was like in the $50, $60 range. Twitter was trading way below it. And then I was like, well, that was easy money. Like, I should have bought more shares. I had never been part of that situation, right? That was new for me at the time. And I was like, I wonder if PayPal could turn into like something like that, where they announce the acquisition price target, and then hopefully it's above the share price. I can't imagine that they would agree to sell it below the current share price, and that would be the gap up. And then you just wait out 6 months to a year, whatever it takes to for the deal to consummate, if you will. So that was kind of like the backdoor, like having a net on the bottom, if you will, for me. Like, so I was like, well, I can sell puts, calls, and lower the adjusted cost basis that way. And then I could get bailed out potentially on some sort of a miraculous acquisition. Probably very improbable, but it isn't unlike Elon Musk to do something like that, because he's the strangest person on planet Earth, in my opinion. I don't even think he bleeds blood. I really think that he is an alien. I believe in a different form of life, because I see Elon. Like, I don't even think he has DNA and RNA. This dude's different. So
yeah. So as far as acquisition, I think that you guys may not have seen this. If you have, then that's fine. There was an idea that was floated out of
you guys' comments are crazy, man. I'm reading these comments.
By acquiring PayPal, tagged Anthony Noto. We got a response. Did you see the response?
Yep.
Well, I missed it, Roy. I'm sorry.
Anthony Noto said, "Would never happen as long as I have a say."
What was that? What was the question?
For SoFi to buy out PayPal.
Yeah, which, I mean, like, market caps and everything, like, it wouldn't happen. It wouldn't. But I love that, because as a shareholder of SoFi, I'd be like so mad if it was like, hey, we're buying PayPal for emerging, or like, why? I just left. So it's actually really interesting, because it's so rare. I had to double check it because of the period at the front. I'm like, is this some sort of like scam account or something? They're like, no, it's legit.
Maybe I don't understand the financials as much as y'all do. You want to sell puts and calls, I'm your guy. But PayPal's like a $40 billion company still, right?
Under, yeah.
I mean, let's wait a week.
35. What's a few billion amongst fictitious numbers on the screen?
Yeah.
Neither of us can fathom that kind of money. But what is 35? Who cares what it is? We don't have that kind of money. And I don't think SoFi does either. So why would they even be chiming in on something that isn't even financially feasible for them?
Well, no, I think Noto is just like exclamation point, like, No, guys. Like if in case there's any
Like they don't
doubt,
want to touch it with a 10-foot pole. Is that what
no,
you're saying?
there's no reason for them to. That'd be a terrible acquisition anyway. And like PayPal is not dead, but it's a business is clearly in decline. And Enrique Loris is going to cut, expenses, cost cutter. But at the same time, everything else is also declining, and EPS is even declining in spite of that. It's like, dude, it's not Western Union, but it's not good. And I don't want to be in a business. I don't mind stock being in decline or temporary decline as they're figuring things out, and then they invert. Like, I have some companies like that, but one that's like, okay, it's in decline, and is there a plan to actually invert that? No. Okay. No, thank you. I'm out. So yeah, as far as buyout candidates, I think Google actually would make a lot of sense in their ecosystem. They have the whole agentic play that I think that they might just dominate again. And what they really need there is something like a PayPal that sits in between the agent and the actual transaction, that handles a lot of the mechanisms of that payment that you might not be thinking about, like the fraud prevention and detection, that handles chargebacks, that handles refunds, that handles like the Braintree, the payment service provider, which they would have to have anyway. Right. That could make a lot of sense, and there's a very close working relationship between Google and PayPal. They're already integrating them in their ecosystem as far as the agentic payment stuff. That I think could make sense. Apple, could buy it like with the money that they make, like easily if they wanted to, and use that to run Apple Pay, because they already are having to use payment service providers for Apple Pay, which is growing rapidly. On top of that, they'd have Venmo, or they could even sell off Venmo. Like the thing is, you guys raised a good point on Venmo. Venmo is probably worth like $15 billion on its own.
Right, half the valuation. Yeah, 40% of the valuation.
10 to 15. So
I think Venmo is actually an asset that many people would want to own. Even SoFi to a certain degree. I'm not saying that they would pursue it, but I could see somebody, maybe a bigger company, making an offer for Venmo to be spun out, and I don't know what happens with the rest of it. Maybe it gets taken private or something. But I think Venmo is like the diamond in the in the rough, essentially, with regards to PayPal.
So Roy, I know your investment thesis is broken, but I always ask myself this when I exit a position, because I've exited positions for wins, and unfortunately I've exited positions for losses. If you're going to be in this game, I promise you, it's like I ride a motorcycle. It's not if, it's when, as far as an accident, and you just hope that it's not so bad, right? That's in investing. You're going to lose money at some point. Hopefully it's just not more than you can handle emotionally and more so financially. There's a multitude of reasons over the last few years that your investment thesis was broken. What would PayPal have to do after your 31 days of probation are up? Because I'm sure you're tax harvesting this loss. After that happens, what would PayPal need to do to where you might be willing to look at PayPal with a different set of eyes? Or is there nothing they can do? You guys are divorced and there's no hopes of reconciliation. Like, where are you at with it? And I know it's early. The scar's fresh. The wound is fresh. But I feel like you're seasoned enough, based on how I know you on a personal level as well, to where you've thought about that as well.
Yeah, in essence, I'm always willing to change my mind on an investment that I hold or an investment that I don't hold or that I sold, rather than just, double down or triple down and be wrong, or not buy something that I should have bought earlier, but I still see the thesis. So for PayPal, a lot would have to happen. So one is I'd have to see, which was lacking, frankly, it was lacking in Q3 in their earnings, a concrete plan and vision of what PayPal is becoming. It was getting fuzzier and foggier as time went on, which wasn't what you want to see. The messaging was not crisp and clear. It was really fuzzy. And as a result, so they would have to show that. It would have to be compelling enough for me to believe it. And I'd also have to see execution. Now, realistically, in that scenario, some people are saying it's all because of the price. I mean, that's not the reality. If PayPal came out and the pivot's doing great, advertising is doing awesome, They have a very clear roadmap, and they're executing at a high level. It's a $90 stock instead of 40. I'd buy that stock, but I think the odds of that are so, like, I would say not even 1% of happening. Who they have as a CEO is just the cost cutter guy. He's not going to innovate or pivot. If things go well, it's just because Alex Chris laid the groundwork, brought in the right people, and it just took longer than expected, and the market just didn't have enough patience.
Was them replacing or firing, for lack of a better word, Alex Chris, was that the straw that broke the camel's back for you?
It might have been. Like, it would be one of those things where I'm like, okay, I'm gonna have to see who they have that's new, like what's going on, the reason for it, and everything. The guidance was what that at that point that was like, okay, they're literally saying that they're in decline. I will believe them because, hey, they've not guided us. Well, it was a miss last time. Actually, if you look at Q3 guidance or what they guided for in Q3 versus now, I don't know what happened. I had some people that were shareholders that were asking me. I'm like, I don't know, man. And honestly, it's not worth my time to even look at now because I'm done with PayPal. So.
Interesting. What about you, Tevis? Have you dabbled with PayPal with this valuation? Does it intrigue you at all, or she was never alive to you? She's still dead to you. Where are you at with it? I'm just curious because I have some paper pain right now, but no actual realized pain from PayPal. And I'm of the stubborn mindset that I'll manufacture the win. Worst case scenario, selling puts and calls. Portfolio margin obviously makes it a lot more financially feasible as well. If I was having to do the traditional cash secured put route, I would have never even been in it to begin with. So it's kind of a moot point, right? For me.
It's not, it's a good question. It's not something that I want to be in. It's not something that I want to have a long-term position in. I don't see the growth. And I mean, like, the market doesn't see the growth either. The only way that I would play PayPal, I don't know at what price, maybe here, maybe I'll wait 3 days, maybe I won't do this at all. But the only way that I would play it is to buy some like at the money leaps on the off chance that they get acquired or get taken private, and I can just juice a little valuation boost from that. I gotta be thinking that it's top of mind for the management team, given the reaction that they had today. Like, something has to give. And I don't think the market is going to, maybe it's going to turn around, but I don't think the market is going to give them their flowers anytime soon. And I don't want to be, Roy just got out of this abusive relationship, man. And good on him that he did. He was making excuses for PayPal, for his abuser for years. I don't want to get into that shit. Fuck that. So
what do you think about this comment at 543, guys? This RRET Law 1. PayPal needs a real CEO. Picking a board member feels like a firing, and we need a CEO to fill the spot until we find someone.
Well, in some cases, they go and they use the CFO temporarily as acting CEO, and that would have been a colossal mistake because Jamie Miller is not CEO. The stock might have somehow gone negative. It was a firing for sure, and they brought in a board member that knows the business. I'm guessing that it's probably on a, like, you're going to be here for like 2 years and then we're going to find somebody else, but that gives us time. And that's probably the right approach, honestly. PayPal needs somebody at the helm. I don't want to be in it, and I don't want to be in it with him there. On the other side, we'll see what PayPal looks like and who they get. But yeah, they're not picking a guy that's coming in with innovative ideas to help this become a growth. And the funny thing is, Jamie Miller, towards the end of the earnings call, was talking about, because they were asked about like growth versus value in the Q&A. And she's like, oh yeah, we have great momentum and we're growing. I'm like, what are you looking at? Because you're
looking at 2028, Roy, 2028.
No, like, they even withdrew the guidance that they had issued for 2027. They're like, nope, that's not happening. I was like, yep.
Wow.
Yeah. I mean,
did you fix? So this is fun. Do you have a couple more minutes on PayPal, or do y'all need to get into more important stuff?
I think 2 more minutes, and then we can move on.
So you look like Alex Chris. Let's say you were able to still have this job, but you're Roy Crossroads. What could you do to fix PayPal? Because here's the thing. Sometimes things just aren't fixable and it doesn't matter who's at the helm. So is it something that you could fix? You studied the company very closely. What could you do to fix it? Or is there anything that you can do?
Yeah, I mean, I think Alex was doing the right things. They're just going to take mostly a longer time. He's leveraging the data. He's actually bringing this very siloed ecosystem and making it cohesive. Will it work? Advertising's like almost certainly will. The rest, it's too early to say, but everything's moving very slow. So, I mean, like, honestly, I think you would, if the only way that this company would actually be worth perhaps an investment anytime soon would be like an Elon Musk type of person coming in and just cutting heads and trimming down to bare bone. And, oh, you failed to execute, you are just gone. I don't care, what your contract is and what fees we have to pay. You are done. You cannot tolerate mediocrity. And they have for the longest time, even out of like their CEO previously. I'm not saying Alex Chris, I'm saying Dan Schulman.
Right.
That's the only thing. And I'm not the type of guy that could do that. I have too soft of a heart. I know layoffs are necessary and they need to do that, but I've been affected by that. And so for like me to be the guy that would do like mass layoffs and trim headcount by like 15,000, I couldn't do that. So
how many employees does PayPal have?
24,000, 25,000.
So you're saying trim the workforce by half. You think that this Enrique character, is he willing to do that? A, B, if you're able to trim that many employees, what'd you hide? What does that speak about your ability to be fiscally responsible?
They have 24,000 employees for what? What are they building? Like, that's like 21,000 too many.
So a lot of it is just because it's spread throughout the globe and that they need people in those places that are domain experts of what's happening in those situations. But also some of it was just what Dan Schulman was doing, which is just utter freaking garbage. Like just hiring massive number of people that did very little, tolerating mediocre performance, acquiring companies and like, oh, you have your own HR team? Cool. That's awesome. We'll just do that. AI can replace or make efficient who's actually doing work that's credible there. It can help. Like, customer service is already terrible. Bring in Palantir, bring in some other companies as well that have excelled in this. Get your customer service right. Use AI to do it. But yeah, that's. I don't think that I would be able to, tell 12,000 people, sorry, you don't have a job. I would have a hard time with that, even if that's the right thing. Now, that wouldn't happen overnight. That would happen over like 2 years, or like it would just be out there. Like, if this is what's happening, hiring freeze in all these areas. We're having people, early leave stuff, and we are tightening down the hatches, right sizing our business. That's the term. And I think that they had said that they were accelerating the layoffs. They had talked about getting rid of a couple thousand, I think, over the next few years. I think that they doubled that to 4,000, which is still 20,000 people. It's, I don't know.
So it sounds like what you're saying, Roy, is that you think that it can be fixed. You just don't have the temperament to do it.
Elon Musk can fix it.
So again, to my pie in the sky theory, I feel like Elon's the guy that could be like, hey, let's bring it in, and heads are gonna roll the way that they did at Twitter when I took it over.
Yeah, Elon Musk fixed Twitter. He can fix PayPal. I don't think he wants to. I don't think he should. But yeah.
Can we talk about SoFi now? If you did, right? Because you said you lost, it's all relative. You lost money with PayPal. You did your little, I was wrong, and you're going to do something in more depth later. We may actually team up on doing something on why stay in versus not stay in. We'll tease it for a month from now or whatever. Do you think that SoFi is the kind of vehicle that could help right those wrongs for you in PayPal? Like at these valuations? I mean, because we obviously, I I'm sure y'all are in the same camp, right? Like these earnings were the best that SoFi's ever had, a lot like Palantir. There's a lot of companies putting out the best earnings ever, and the market's not really rewarding that right now, which is kind of scary. That's a whole different conversation, I feel. But
Well,
would you trust SoFi at these levels to be like, hey, go get me the 3 or 4 or 5 or $10 that I lost on PayPal via premiums and capital appreciation?
so yeah, let me correct you on one thing. Like SoFi had very good earnings,
I
but
thought the guidance were not the best though. They
yeah,
were
yeah,
good.
there were some weak spots. But Palantir, I keep saying this every quarter, and I don't know when that'll stop. Had
Those were off
literally
the
the best earnings of any company that I've held at the time
Mhm.
that I follow, and they keep doing it again and again. We're going to look at that in just a moment. I own so much SoFi, like for that reason. I bought some more shares through cash secured puts that were assigned in earnings, and I don't regret that at all. It's at 24. It's fine. And I own a ton of Robinhood too. So they're kind of in the same bucket where I'm like, I can't really buy more of those, even though they're both very viable right here. Instead, what I did was I actually bought actually 4 stocks that I already own that I just wanted more of. VG was one of those, and I actually got some options on VG, basically at the bottom today, which was kind of nice. Air test systems, I added more because I'm like, dude, this is such ridiculous confirmation, and we'll talk a little bit about that too this week, but throughout this entire earnings season, not just from the air stuff. I added actually a little bit more Palantir because like the earnings were ridiculous, and it's expensive, but it's not egregious expensive. Like it is relative to a lot of stocks, but where Palantir has been, it's not egregious. And I added more in Nvidia just because Nvidia. And I still have a good chunk of cash that I'm like, hey, in this current environment, I don't mind having some cash too, especially through an earnings season. Like Figure is one of those. It went. You remember Tevis? We were talking about it. It went all the way up to like 75 or whatever. I think it hit 43 today. Was down like almost 18% at one point. So it's like, man. So,
yeah.
What about for you, Tevis? What are you doing with SoFi?
Nothing. I'm not doing anything with SoFi. I could be buying more. Definitely not thinking of trimming anytime soon, or selling anytime soon, or writing covered calls anytime soon. I have cash secured puts right now, and I am potentially going to write more cash secured puts. I'm too busy writing cash secured puts on Nebius, man. The premiums are so freaking juicy, and the story is so good that it's too good for me to pass up right now, even above SoFi. But the way I explained it to somebody on the New York meetup is like, he asked me, he was like, why do you do in the money degen cash secured puts on SoFi? And I was like, dude, it's like buying freaking treasury bonds. Like in my brain, with the amount of DD and research I've done on this company and the prospects that they have, like I'll collect $10 worth of premium right now and get assigned at $35 and own those shares at $35 cost basis. Cause like I know that it might fluctuate. It might pull back 3 months. It might pull back a year. It might pull back a year and a half, whatever. But like the long term, the company's going up and to the right because they're executing on all cylinders. They're accelerating in terms of their growth. Everything is going well. Like big business banking is going to come up, small business banking as well. And tech platform is going to catch a bid again. Like I'm just so freaking bullish. Like it has such a place of absolute security in my mind that you can just give me a price. And so in that equation, because of that confidence that's backed on that research, I will write in the money cash secured puts and not think twice about it. Now, again, that's in a time when I have liquidity, but I haven't been doing that as much recently because I'm doing that on Nebius instead, and the premiums are way more juiced. And TJ, I suggest you look at Nebius for the premiums as well.
Yeah, that's Nebius is one that one of two that I'm like, do I start a new position here with some of this money? And Nebius is very enticing. I might.
It seems like on my Twitter feed or X, whatever the heck you'll call it, it seems like Nebius and Zeta are like the two things that show up all the time. And then there's another one that 2 more is the EOSC and ONS. I feel like those four are the ones that just the algorithms got me. Maybe I clicked on something and I've watched Tevis talk about Nvidia, but I haven't like really listened yet. Could you give me like an elevator pitch on Nebius?
Yeah, it's a data center play. The thesis is really the demand being there higher than the projections of what they have from an AI trade, essentially. And so that's one piece is like, is the demand going to be there? Is it going to continue? So on and so forth. And the second piece is, are they going to have the ability to meet that demand from a build out perspective? So basically, think of these guys, TJ, as like they build out the data centers, they get all the hardware, and they're renting the capacity. So the way that I think about it is like Uber, right? I want to get from point A to point B. I can buy a car which is really expensive, and I have the hardware. I can use it whenever, or I can just take a cab, right? So I think the business model is easy to understand. Data centers are highly in demand. Like Iron is doing a similar thing. Cypher is doing a similar thing as Nebius is. They signed deals with Microsoft and Meta. The recent deal with Meta, which they announced last earnings, was $3 billion because they literally were like, this is all the capacity that we can meet right now. Over half of 2026 ARR is already booked. They're growing 500% a year. So, and the cool thing is, they're now building out all of these new data centers. So like I'm doing weekly recap videos on Nebius, and a lot of what I'm focusing on all those videos is land permits, is city council approval votes of new data center locations in the US, because they're looking at Missouri, they're looking at Alabama, they're looking at Indiana, they're looking at Dallas, they're looking at all of these different locations for them to open new data centers. And as they open new data centers, one of the things that they do is they don't just blindly open the data center. They will only commit to it if there's a buyer on the other side for that capacity. And so they pre-sell essentially that capacity, and then they go ahead and they take out the land and they build the building, and they then go operational from there. And so if they're building all of these data centers that I don't think is being priced into the stock right now, then that means that there's a client on the other side of those. And it's either already booked into their guidance, or it's an acceleration based on their guidance. And they've beaten and raised quite a few times already. And so I think that the ability for them to meet the demand is there from their proven execution. They're expanding almost all of the current data centers, expanding Israel, expanding Finland, expanding the UK, expanding New Jersey out a lot. And in September, it's actually going to have way more capacity. And then they're also building out all of these new data centers. So potentially we'll get a decision on Missouri in a couple of weeks here, probably on March 2nd. And they just had some news that broke this week around 2 new co-location facilities in the US. One of them is in Oklahoma. The other one is potentially in Minneapolis, based on their hiring. Then we also know about the sites in Indiana, in Franklin, I believe it is, and also in Birmingham, Alabama. So the point that I'm trying to make is like these guys are moving like crazy fast to try to meet all of that demand. And we know, at least I'm bullish from a macro perspective, that demand is going to continue. How do we know that? Well, dude, just freaking listen to Meta and Microsoft, who both reported earnings last week, who are like, hey, we're going to increase CapEx. Where do you think that money's going to go? Where do you think they're going to spend more money? It's like, obviously, they're going to spend it in the AI build-out phase. And they already have partnerships with Nebius, and I think both of them are going to extend their partnerships even further. And right now, TJ, I don't think the market is believing this. Nebius is headquartered in the Netherlands, but they're obviously listed on the US exchange. There's about 6 or 7 analysts that cover it. The average across all of their price targets is like $175, and the thing's trading for $90 right now. Analysts are sticking their neck out. They're saying this thing's going to double in 12 months, and that's just for the analysts that cover it. So I don't know. That's like a quick elevator.
So is my microphone on or no? It is.
Hold on, guys. We got some breaking news. We can come back to Nebius, but can you throw us up, Tevis? NVIDIA is nearing a deal to invest $20 billion in OpenAI as part of its latest funding round, per Bloomberg. This is really interesting. There was, I think it was just yesterday, that Jensen Huang was being interviewed, and we can play that interview if you guys want. But where they were asking about this. A lot of companies have exposure to OpenAI, and OpenAI has been a little bit weaker. There's been some criticism by Sam Altman's company, OpenAI, that's saying that the NVIDIA product basically is insufficient and it's causing their OpenAI ChatGPT rather to underperform. And then Jensen was interviewed back and like, what about your investment in OpenAI? Does that concern you? This and that and the other? And he said, no, look, we were given the opportunity, and essentially he was like saying respectfully decline. This right here, by the way, to me, it signals that, and so there were some thoughts. AMD was like roaring off of this because, there's comments in that direction. AMD effectively had to sell some of their own equity to get to sweeten the bribe for OpenAI to buy some things. NVIDIA didn't. It's the other way around, that they own stake or they potentially own stake in OpenAI. Here, I think that this signals a couple of things. One is a lot of it was just talk. And second, that whatever has been worked out, that this probably also includes an agreement with OpenAI to be buying a whole lot of NVIDIA products as well. So really interesting. Does Nebius have exposure to OpenAI? And how much of this do we know?
I'm not exactly sure. I can look that up for you for real now. I don't know off the top of my head. I was looking for the Jensen clip, but let me play that right now, and then and we can react to that, and I can also answer TJ's questions.
Yeah.
I'll be clear about OpenAI again.
Sure.
So yesterday you said that the NVIDIA is not going to invest as much as 100 billion in OpenAI.
No,
for the current run.
we never said we were going to invest $100 billion in one round. That never was said.
But how about the
Yeah.
overall commitment? Because last September you and OpenAI
there was never a commitment. It was if they invited us to. So let's start over again. They invited us to invest up to $100 billion, and of course we were very happy and honored that they invited us. But we will invest one step at a time.
All right, but is that overall commitment still stands, or it's not
No,
a commitment?
I told you just now.
Okay.
Yeah, you keep putting words in my mouth.
Okay.
It's not.
Sorry about
Yeah. I know that. Yeah. They invited us to invest up to $100 billion, and we are honored that they invited us. We will consider each round one at a time.
So one other interesting thing that he did mention was like he mentioned that he wants he's basically making a bet on XAI as well. Like he's really bullish on that. I kind of find this interesting. I find it interesting, and I know we're deviating for Nebius, but just sort of give me a little bit of rope. I find it interesting, number one, that he actually went through with. I mean, it's not official; it's just a considering. But if it does go through, that it's 20 billion in the first place. And the second reason I find it interesting is that 20 billion, if they were, let's say, inviting them for up to 100, is a pretty paltry sum, all things considered. It's like what, 1/5 of what they could have invested. So I'm not sure how big of a fan Jensen is of Altman. I don't necessarily know that like he would just say no altogether. I think the prudent thing to do is probably just sprinkle your bets across the entire industry and see what happens. But of course, the circular sort of investing, like NVIDIA is going to make that money back through all of like the purchases. So I think strategically it makes sense. I'm trying to guess as to what Jensen's thoughts are on Altman and have that be indicative of that investment size.
So I guess TJ, if you have thoughts on that, I'll give a little bit more read on that too.
Yes, I was looking at stockanalysis.com in the background and just trying to get familiar with. It seems like this company was just like existing, and then all of a sudden you have gross revenue growing up like 400%, seemingly overnight, and they've got like $4 or $5 billion of cash on the balance sheet, unless the information is not accurate on stockanalysis.com. but then I also see $4 to $5 billion of debt, right? Just eyeballing it real quickly. What how solvent is the company? Like, it looks like they got a little bit of net income, but it looks like the free cash flow is in the toilet. Like, what do the financials look like? I mean, are they super solid? Who bankrolled them? Did they just issue a bunch of shares along the way? Like, how did they build up their balance sheet and now the business that they're in?
Sorry, we're talking about Nebius or NVIDIA or OpenAI?
Nebius. I'm sorry, Nebius. No, NVIDIA speaks for itself. I'm talking about Nebius. Are we back on Nebius, or did I miss the? Because I saw that
Roy's on mute.
muted, Roy. You're muted, Roy.
Is it working now?
Yeah, you're good.
I saw that Jensen. It was all over Twitter yesterday, or I think it was on CNBC.
Yeah. So before Nebius, and then I have that Nebius question for you too, Tevis, and the other one for TJ too. On the NVIDIA thing, I think that this is just negotiation that's back and forth. Like, it was very clear that Sam Altman and OpenAI is he's trying to get a better, he's using leverage to be able to get a better bargaining position. So AMD basically is that. And I think that Jensen basically saw like even more of this with their comments on NVIDIA's product and everything. And so him responding that way openly, I think shows like, hey, two can play at this game. OpenAI, we don't have to invest in you. And in fact, if things continue like this, we won't invest in you. Good luck finding your equity, because we're one of the most wealthy companies in the world, and you kind of need our product, even if you want to act like you don't. So really the ball, they both have, some leverage and some things that they do. They're stronger together. I don't really love the OpenAI exposure, but this is $20 billion is a lot for most companies. For NVIDIA, it's like, it's a chunk, but it's not crazy. That was one of the sites, one of the things that was brought up constantly on Microsoft's earning reaction. And we talked about that previously, where, they're very exposed to OpenAI. And I think 45% of Azure is reliant basically on OpenAI. So Tevis, I'm curious on Nebius, in addition to the question that TJ asked on the debt and cash levels and growth.
Yeah.
How much exposure or how much reliance do we know is on directly from OpenAI ChatGPT, if any?
Yeah. Okay. So Nebius does not have direct equity stake in OpenAI. OpenAI is not a direct, retail customer in Nebius. The only exposure is indirect through Microsoft. So as we know, back in the fall, Nebius signed a multi-year agreement, and that was about $19.4 billion, I think, over 4 or 5 years. And analysts are essentially highlighting that this is going to be helping to scale. The GPU capacity is going to be helping to scale the infrastructure needed for OpenAI's deployments. But in terms of a direct investment or a direct relationship with OpenAI, that doesn't currently, to my knowledge, exist. But keep in mind, guys, like Nebius is a neocloud provider, right? Like they're essentially, in relation to Microsoft, they're becoming like a secondary layer for Azure, right? So it's all around Microsoft's internal capacity. And as we know, Microsoft is now hedging it had a huge bet on OpenAI and the scale there. In terms of the cash on hand, they have about $4.9 billion, to my knowledge. Nebius reports earnings on February 12th. So we're going to get more details there, but about 4.9 billion. I believe the cash on hand increased about 100% year on year. And the reason for that, TJ, is because they're raising a lot of money through dilution to restructure, but also to accelerate their growth of their build out phase. They're full growth mode right now, right? The CapEx guide is around $5 billion to build out data centers in the US and in Europe. And there's also a huge Europe opportunity. Keep in mind, like the risk with this investment is that they're not profitable. EBITDA profitability is expected sometime late 26, and the full net income profitability is around 27 to 28. My guess is going to be a little bit earlier, in 2027. But right now, it's full on growth mode. The other thing with regards to profitability that I want to highlight is we got news from Nebius a couple of weeks ago that they were going to be one of the first partners for NVIDIA's Vera Rubin platform. And that's going to start on the second half of 2026 in both Europe and in the US. And the reason why that matters is because if they can deploy Vera Rubin at scale, the margins are going to start expanding, and that's really going to help them with profitability as well. So a lot of different paths for them, like a lot of ways to skin that cat. There's also the European build out opportunity because Europe wants to allocate like $100 billion or so to different providers for data center build out to compete with the US after Trump tariffs. Anyways, I'm rambling, but that answers your questions, hopefully.
Yeah, that's helpful.
But you said that they were diluting like crazy, but I was looking in the background at again, stockanalysis.com. I don't work for them, just who I'm using. I mean, you can use whoever you want. But it seems like the float has decreased by 25% in the last calendar year.
Not sure.
They had like 250 million shares, and now they have like 225, or like it's decreased substantially, which is
a lot of that you have to just disregard and throw out, just because they've pivoted away from, is it Yandex?
Yeah.
To Nebius. So it's a very different business. It's kind of like BM&R before they became a digital asset treasury. Just it's such a different thing. You just can't compare. So
is this like a takeover play or something? And then they're like, hey, we're doing this now. Kind of like a lot of like the Bitcoin miners that nobody talks about how efficient they are mining Bitcoin. They want to know, it's like with Riot, do you have a deal? Do you have a deal or not? Like, you got a deal with AMD. When are you going to get the next one?
Their whole team is like ex Yandex, and yes, the Russian business, essentially the Russian Google Yandex. So this is like the entire team essentially came from Yandex, the entire executive team, so on and so forth. In terms of the actual raises, they raised about $1 billion of shares in September, I want to say. And they did that at about $92, $92.50, I think it was. And so, and in addition to that, they also issued close to $3 billion of convertible notes for 2030. So they are raising money, but all of that is going to be accretive because they're using it to accelerate their business even further.
And how long ago did they make the pivot? Because I mean, I'm looking at the chart and this thing's up quite a bit in the last year or so.
Not entirely sure if it was a hard pivot. Roy, do you have context there?
Not really. It's been too long since I've looked at that.
Yeah, I'm not entirely sure that it was a hard pivot, but like it was a multi-year process, I believe. I think like back in 2022, and I think they had I'm trying to remember back to like when my
Russia-Ukraine invasion was the catalyst.
Yeah, and they divested around 2024 completely, and that's when they like fully rebranded in 2024.
And the premiums are juicy, right? Because I mean that probably was one of the things that also drew your attention, Tevis. Because I do know that you are a premium junkie.
Just the premiums are very exciting. So definitely take a look at the premiums. But honestly, man, like I think how the strategy for me with regards to wheeling has evolved is I'm doing it more aggressively, but on fewer names that I'm hyper bullish on,
right,
you know?
same.
And so it's like, I don't like, if I'm in the money or at the money or whatever, like I'll do it a month out or 2 months out as opposed to a week or 2 weeks. But I'll do it in bigger volume and with fewer names.
Right. Yeah. I only have 7. I only have 7 because it's just so hard to follow all these companies. Like I'm always amazed with like Amit that he seems to know everything about every stock on his channel, and I'm like, this dude's like a walking Google, you know. It's just like I can barely keep up with my little 7, and I got like 3 to 4 that I you know, they make it in and out of the portfolio regularly.
I think I'm only wheeling like 3 names, to be honest with you.
Okay, so this is a list that I saw a little while ago, and Nebius is on the top. This is projected growth. This is not his numbers. These are like analyst expectations, or they were at the time. Nebius with 521%, which is just ridiculous. NVIDIA, 50%. Palantir, which that number has to be way higher. We are going to talk Palantir earnings in a minute. By the way, before we do you guys know what they printed for revenue growth in Q4?
Yeah.
And the guidance. Oh man, it's like the opposite of PayPal's quarter. On like within 24 hours, whatever. But yeah, I mean, they're just killing now. You have great companies that are growing fast. Apple, Broadcom, Nubank is on there. Figure, which I talk about a decent bit. But I mean, like, there's nothing that compares. Now, there's a cost to that, and it's not profitable growth. I don't think you can grow that fast and have a profitable growth and go immediately to the bottom line, because there's a lot of CapEx that needs to be done. But I mean, it is. It's something else. The execution seems very high. The product itself, as far as what they do, they compete very well with Google Cloud. And I think nobody else does. Actually, I think they're maybe even just slightly better than GCP. But I'd have to look at that slide again. Manuel did a stock take episode with us. At the time, I was holding Nebius as an investigate. I decided, I took my profit, made some good money off of it, put it into NVIDIA. Figured that Nebius probably would outperform, but I have such beta in my portfolio that I was fine selling it. And I thought it was a good, maybe not a great opportunity. I'm leaning towards a greatness now. So it may well be that I end up buying at a higher level, because I'm not wrong. I'm not like so prideful that I'm like, oh no, I sold it once at like 45, whatever. I can't get in at 85. No, like if I'm going to make money off of it, I'm glad to do that. So.
Yeah, it's going to be volatile. And again, if the thesis breaks from a macro perspective, in terms of the demand is not there from the market, the thesis breaks. If the thesis breaks from a sort of company level perspective, they cannot meet that demand fast enough and they lose market share, or the growth for whatever reason, goes away, the floor is going to fall out. In between, if those two things hold true, it's going to be volatile as hell, but it's going to be going up into the right. I can't wait for their earnings, man, on February 12th. I think they're going to do very, very well. So it's my second largest position right now. And you should look into it.
Yeah, I'll definitely check it out, man. I appreciate you've been covering it for a while, because I usually, when I grab my workouts after the market, I put you crossroads, like the stuff that I've missed, to kind of get me through these boring freaking garage workouts in my little sauna session. But it's one that's definitely got my attention. And Roy, you talk about AEHR with frequency. I have no idea what the heck it is yet. I hear the rumblings and mumblings in the background when I'm working.
Yeah. In essence, well, I guess two quick things, and I will talk just a little bit about air. We are going to do a stock tank episode probably in the second half of February on air test systems. Hoping to have another one too this month. We'll have to see. Not one that I'm pitching. And so Tevis I was gifting Tevis $100 worth of air, which is up pretty decently, even though it's not at the peak of where it was for our stock exchange thing, the competition, and buying a ton of it myself. I actually added more today too, even though it's overweight, frankly, but I'm okay with that. And Tevis, has been looking into it some, and he's like, yeah. So he's been buying it hand over fist. And I've also found the other side. Like, I don't always agree with Tevis, but when he's as convicted about something as he is with Nebius, like he was with Hims, and I made a lot of money off of Hims. I know Hims is not doing so well right now. Probably still a second half play, still with a small bit of my position. I trimmed a ton of it though, because it has weakened. He was right on that. And I listened and I looked, and I've done the same with Nebius. I'm like, I think he's got a winner here. So I just have to figure out what my entry looks like and how much. And it's made a lot more likely too, just because I have PayPal money sitting there, which.
Yeah, I'll see Vitaly's comment.
No.
Yeah. I have Amazon that I've been buying for the last couple of months. So very bullish
6
on that.
years.
Thursday.
Well, and there's nothing wrong with that. But, back in 2022, you could have easily said the same thing: buy Amazon and not Palantir, just go to bed. And Palantir's up a ridiculous amount. And so if you have asymmetric opportunities where there's always risk, no matter what. I'm not saying like it's trash or anything, but like air test systems that I think is, and Nebius, which might be, like, why not? I do think that once your portfolio gets to a certain size and you're set for life and you want to take some risk off the table. You don't always be like high beta stocks and stuff. So, but yeah, Air Test Systems is in the automated testing equipment market, but they're further upstream as far as testing for most of the products at the wafer level. And just because of the insane gold rush, this is a picks and shovels play on AI, because the ramifications, the cost of failure of not getting these products right is immense. There's been some complaints on it. And also, if you want to increase throughput, that's a major choke point. So it's a really simple thesis. There's a lot more to it than that. And since we're kind of on the subject, I was going to mention Air Test Systems in context of Teradyne. Teradyne, so the automatic testing equipment market, there's a lot of small niche players like Air. Air is a microcap. It is under $1 billion market cap. Teradyne is a giant. And Teradyne posted earnings this week. It was really interesting to see what they did too, because everything just went massively up as far as what their needs are, what they were doing. Let me see. Is this? Yeah, that is Teradyne. Okay. Throw this up real quick here.
So just logistically, let's do Air and then Palantir very quickly, and then we got to run through the questions because I got to be out of here in about 30 minutes.
Okay,
go for it.
So yeah, Teradyne is seeing that same surge as what pretty much everybody else is here or is continuing to do. Even more so, I won't go into the bookings. I'm not invested in this. I was actually looking at Teradyne. I'm like, I think that they're going to do pretty well too. I just think I like super concentration. So 43% now revenue growth year over year, which is insane because like you can see where they've been historically. 6%, 4%, 12%, -10, 4. Now that is not over the quarter, but that's that is quarterly actually. So ridiculous acceleration. The bookings and everything, it's same as ASML, like very different product. They don't do the same thing. But this gold rush is going to create a lot of winners, and Air benefits from this immensely. And all earnings season, we haven't said, oh, we're going away from complexity to cheaper solutions and fewer chips, and we don't need RAM, and we don't need HBM, we don't need hard drives. It's the opposite. It is the opposite to such a scale. I mean, like they're a screaming buy right here. So that's why I added more. I'm done with Air as far as the comment there. So.
Yeah, and I have calls on Air, so I will be very happy if Roy is happy. When did they report, Roy? Do we know?
They already did. They're almost always.
Okay, we covered it on the show. Yeah. Okay.
I gotta run. My wife's got a honey-do list, but I just wanted to say something because I am, full transparency, as you guys know, on my channel and on X. But I have done something very, very responsible here lately, to Vitaly's point on Amazon, is I looked at the portfolio, I looked at the watch list, and I was like, I feel like 6 years into selling options at the last 3 years at a very, pretty high level, relatively speaking, I need to have that cornerstone in the portfolio because I'm afraid that people are just gonna go all degen mode on the BMNRs, the freaking BMNU, and even SoFi for that matter, and Palantir, because I was super heavy on Palantir and SoFi early on, and thankfully they've worked out. But sometimes those types of plays don't work out. That's just the reality. Not everybody's going to be a Palantir. Thanks to Amit, he got me into Hood whenever I was doing the episodes on his channel, right, teaching his community how to sell options, and we did extremely well with that. By the way, Amit reached out to me. I will be on one of his market closes here soon. It's just that because I've gone in a different direction with selling strangles, he thought it was like a little too much for his channel because there's like a lot of newbies on his channel, and we just don't want to steer anybody wrong. That's why we terminated the series. There's no beef with Amit and I. Like stop with crazy narratives, man. We all like each other in this space. We all learn from each other. I reach out to Crossroads. Tevez reaches out to me when he's in a bind because he is a little bit degen with the way he sells puts, putting in mildly. But we help each other out. That's what the community is for. I mean, Matt Money knows how to do napkin math better than anybody I've ever seen. I love tuning into him and Chris Patel, Cash Flow Chronicles late at night while I'm doing my massage share. But anyway, dude, I took this from Vitaly a couple of years ago when we were on a Finance Junkies episode. Him and Carlos were talking about, like, if there's something that could anchor the portfolio, it's probably going to be something like an Amazon. So the most amount of puts that I've ever sold on one stock is Amazon. And that's where I'm at now. I'm doing like a ladder on Amazon. And I feel like if everything else doesn't work out, if I feel like, if the BM&R doesn't work out, you know what I mean? Because that's a real big position in the portfolio for us. I'm just gonna pivot. I'm gonna do my I was wrong episode because those do very well on the clicks. So thanks to you and Steve Fiorillo for paving the way on knowing if you want to get views, just do a title that says I was wrong.
I mean, people like when you're honest. Like they prefer it over. I think most people prefer that over like the cheerleaders or the people that somehow never have a bad trade or investment. I'm not that guy, so I'm going to be honest with people. And if it gets clicks, that's cool. That's really like the only money I made on PayPal was from people watching the "I was wrong" video.
Yeah. But anyway, I've decided to anchor the portfolio with Amazon because if at some point I just feel like, because I'm pretty good at having a decent temperament, but if for whatever reasons I decided that I was just like, I'm done, I'm gonna go make the easier money. If there is one stock that I would go all in based on the way that I have it structured in the portfolio, it would be amazing Amazon, because I just feel like it is being extremely disrespected here. If you can get an entry point in the low 200s, sub 200s, I just think it's going to be very, very hard for you not to come out ahead 3 to 5 years from now on Amazon at these levels. I feel like it's what Google was before Google finally, they put some respect on their name, right? Because I think Google was disrespected for a couple of years until a couple of weeks after this latest earnings report. And
when does Amazon do earnings?
Thursday. And I cannot freaking wait because 5% of my entire portfolio is on spreads, baby. Let's get it.
So one thing that is going to be asked, and it may, depending on the answer, give a very nice entry if people are looking for entry. This is the same thing that Microsoft was asked about OpenAI exposure. How much of AWS actually is reliant on it? Now, the good news is it's going to be, there's probably some, but they have that massive contract with Azure. So I think Amazon will be okay. But there may be some people, like analysts oftentimes, I don't know why they do this, but they'll release notes like a day or two before earnings that will downgrade or have lower price targets just in case there's more exposure than they expect. I don't think that'll be the case, but that might be a dip worth buying into earnings.
Yeah, I have a bunch of puts in the distance. Again, like my game's changed a lot, guys. I don't have as much time to babysit the portfolio, so I'm selling puts a year out, and then I'm selling naked calls along the way. It's a new strategy that, people, y'all heard of the poor man cover call where you buy the leap and then you sell short dated calls along the way. Well, I'm selling the leap because I'm a premium collector at the end of the day. And I've coined it as the rich man's cover call, where I sell the leap and then I sell short dated strangles along the way to just grab as many premiums as I can. And once I get a handful of those premiums in my pocket, then I'll buy leaps for the upside protection. And that's what I'm running on Amazon. So I want Amazon to do well, but not too well, because I think we're sitting at 285 on the naked calls for three weeks out. So I don't mind it juicing. I just don't want it to juice too bad, because then I got to go babysit those, which is a positive problem because that means all the puts are printing. But man, I appreciate you guys. Roy, man, thank you so much for all of the coverage over the years on PayPal. It is hard for me to still be in this position and losing my source. You know what I mean? Because you were my source, and now I'm going to have to go do work. So it is what it is. But I do think that I will be able to manufacture the win. But to your point, the horse that you rode down, guys, because you're going to be in these situations where you lose money. The horse that you rode down doesn't have to be the horse that you ride up. At the end of the day, the allegiance has to be to your family and to your portfolio. You don't have to have allegiance to any one of these stocks, guys. These CEOs sell stocks left and right all the time, and they're not going to text you and tell you they don't know you a damn thing. They're always doing what's best for their situation and their family. So I always say that my favorite stock is the investing balance in the portfolio. And I'm ultimately going to do what I feel like I could do to move that stock up and to the right, because you're the CEO of your portfolio. I take those words from Mr. Premium of the Option. That's, in these chats at times. He's on our channel as well. And it's something that he said on our very first Wheelers episodes. Remember that we're all the CEOs of our portfolios. And I've always said, you push the buttons, you live with your results. So if the investment works out, congratulations. If it doesn't, let's not be freaking trashing the Tom Lees of the world. Nobody makes you push any buttons on here, man. You gotta take responsibility for your actions at the end of the day.
TJ, thanks for being with us, guys. If you don't follow TJ yet, he's on X, he's on YouTube as well. Great person to learn option from. Very down to earth. Also does a nice devotional too. Just a really good guy. TJ, thanks for coming on, being with us in this pain pal of a time. And Doug, thanks for that gift.
It's been paintacular. I'll see you guys later. Appreciate you, man. God bless you.
See you, buddy.
Take care, Tevis. Appreciate you, man.
All right, guys. We don't have time for me to adequately cover Palantir other than just look at the numbers and then look at the guidance and the rule of 40. It's all you need to do. Somehow they're improving margins, gross margins, accelerating while they're growing 70%. Their guidance, you will not believe it, except, again, they sandbag their guidance. So ridiculous. We'll do a deeper look into that, I think, maybe later, and I'll do a separate video at some point. Tevis, let's do Q&A.
Yeah, maybe before we do Q&A, you want to do your favorite thing about PayPal earnings. You got to pick one, and you have 2 minutes to explain it, but you got to pick one thing.
Yeah, just that the unbranded accelerated. So I think Tevis is just, you should have had me do like Palantir instead, man. I'd rather talk about Palantir than PayPal. Unbranded accelerated.
I meant Palantir. Your favorite thing about Palantir is because we don't have
Okay,
time.
let me throw this up and I'll take the 2 minutes. Okay, good. All right, so this is, you can look at this, like this is business to business enterprise. And so these type of contracts, like when you see a meaningful inflection point, I remember, not to call out Tevis and Tanner again, but I remember here, I'm like, this is the inflection point, guys. This type of business accelerates. Now, I never, ever in my wildest dreams saw 70% year-over-year revenue growth off of a higher and higher number, but that's the reality. Let me pull up the slide deck real quick, since he gave me a couple of minutes. 39 slides, we can do it all. No, just kidding. This is a rule of 40 for enterprise software. Enterprise software is in the dumpster right now, with most companies just selling off left and right. One of these for sure is not trash. There's actually a lot more than one, but Palantir, my goodness, that rule of 40 score continues to increase. My favorite thing is the guidance. So let's actually get to that. By 137% year-over-year U.S. commercial growth. Wow. U.S. commercial remaining deal value, customer count. I mean, like everything is good. International is a 1 week spot. GAAP earnings continue to improve. Stock-based compensation, by the way, only rose like 2.4%. It's a lot for some companies. For Palantir, that's tiny year over year. There's that rule of 40 score. U.S. revenue, this is including government, grew 93% year over year. 93%. And I'm supposed to be focused on PayPal growing, like 4%? No. U.S. commercial, BAM, U.S. government, insane. Commercial revenue over to all government revenue. International is lagging. So there it is. 70% year over year total revenue growth. Let's look at the guidance real quick as well. Customer count, good. Deal value is amazing. It's ridiculous. Cash and crash equivalents here. Okay. For the full year of 2026, we expect, and the analysts were so far off. We looked at that little chart where it's like, hey, they're going to grow like 40-something%. This is essentially implying a lot more than that. Same with the first quarter as well. I don't have the numbers right before me, and I only have a limited amount of time. And then this right here. This is probably my favorite slide. Total remaining performance obligations. Look at this, Tevis. Now, this includes short-term, which is going to be paid out over the next year, and longer-term as well. Quarter 3, 2025 was $2.6 billion. Quarter 4, 2025 is $4.21 billion. That is like ridiculous, just ridiculous. Billings as well, nice tick up. And then net dollar retention, which is actually better seen. I'll show, this is the last thing that I'll show here. And we'll just search for it. I think it's under KPIs, but net dollar.
I was actually yesterday. I was at the airport, Roy, with Tanner, and we were waiting for our flight, and he was listening to a mid stream, had headphones in, and I didn't know what he was listening to, and he just turns to me, and he takes his headphone out, and he says, "Bro, I think this might be the best company ever." And I'm like, "Dude, you're not even."
Honestly,
I was like, "You're not even in it," and he's like, "Bro, I think that we might be witnessing the best company ever." And I was like, okay. Like,
honestly, I think it's a buy here. I bought more today. I literally did. This is net dollar retention. It measures customers that have been with Palantir at least a year that have upped their contract. They are doing that. Okay, elite in software as a service companies, elite is this, 120%. They are at 139%. At this level, I think it's unprecedented. The last thing that I'll put out here, Tevis, okay, Tanner says he's a TAM investor. And I've been like, well, why are you ignoring Palantir then? And he just didn't see it. Amit made an amazing point last night when he was covering the earnings call. And those guys did like so good covering the call too. But he talked about the TAM. He's like, well, the TAM is very important here. And he's absolutely right. The reason why is you can look at TAM for a company like PayPal, but you know they're not going to have a chance at all of reaching much of it. They're too low of a moat, too little execution, and competition is insane. Palantir is the opposite. They have one of the deepest moats of any company in the world, period. There are Temu versions of Palantir, but they're just not credible. And people know AI is real. The ROI is insane for Palantir products. That's why the net dollar retention is like this. These are not new customers that are being tricked into buying some superficial thing. They're saying, oh, we need more of this, a lot more of this. There's a little bit of customer concentration heading that way just because they've been so successful in selling the product to them. Anyway, that and execution are relentless. And then the last thing is a lot of times when companies grow like this, they get mission drift and they say, okay, let's acquire, let's grow, let's do this thing. And they start moving away from that mission, that core that actually they excel at. Palantir is not doing that. This, by the way, 70% growth, 100% organic. They're not doing acquisitions to pump up growth like so many of the other software companies like CRM have called out a number of times. That's a trash company. It frankly is. It's not going to die, but it's not the same quality. So this right here, it looks expensive. I am saying it is not expensive. Now, it may need to grow, and it does need to continue to grow ridiculously. But look at the guidance. Look at what they've done relative to the performance of the guidance. It is perhaps the best company in the world, or maybe number two. NVIDIA is like ridiculous. So,
bro, I love you, but I gave you an inch and you took a freaking country mile.
I am sorry, dude. If you give me time to talk about Palantir, I'm going to talk about Palantir.
No.
I want to just like take my hands and like, dude, you should have stayed in. Why didn't you listen? But you are with air, so you know we all make mistakes. I mean, I got PayPal egg on my face, so yeah.
It was a terrific earnings. I absolutely will give them that. The growth is freaking crazy. Okay, let's go through the questions that we have, and I have Thai food that's waiting for me. So, and I'm not going to eat it on stream, you weirdos. So I want to answer. So I want to answer the questions, and I want to go and eat my food. Let's get started. How low can SoFi go before it bases? I think
11,
19, maybe
11.
Okay. Roy, are you considering Nebius to replace PayPal?
Not but on the same weight, probably a 5% weight. We'll see.
Of course, Jer wants to watch. How do you manage an entire team at work and do YouTube and deep dive investing? It is not easy, but I enjoy doing this more than I enjoy randomly watching Netflix or playing video games or anything like that. So, yeah, it doesn't feel like work, which is probably a sign. Are you guys buying or waiting? And what are you buying? Good question.
Yeah, I bought 4. I think I mentioned it before, but I bought 4 things today. Just a little bit of Palantir, I bought Air Test Systems. That was my biggest buy. I bought Nvidia, probably second biggest buy. And I bought, no, VG was actually the second biggest. VG call options for $15.
Yeah, I'm buying more Nebius kind of scared puts. And I'm still a buyer on Amazon and on Meta here. So if I actually have the money, I will do that. And probably buying a little bit more air. I don't know if I want to. Actually, you know what, Roy? I'm getting close to being a buyer on Hood again and just increasing my position because
it's
thank you, Ori, for donating. Roy, what were Palantir's results? Were Palantir's results higher than your forecast?
Yes. Yeah. So analysts actually were pretty close to my expectations. And I was like, whoa, that almost never happens. Usually analysts are like way lower. But yeah, they crushed everyone's expectations except for maybe Real Matt Money because he's a genius. I mean, even Amit and Amir and Arnie that were on the stream were shocked. 70% year-over-year revenue growth off of these big numbers. And then not just a one-quarter phenomenon, guidance. And the gross profit margin ticked up. Like, it's the greatest earnings I've ever seen of any company. And I keep saying that every quarter. I'm like, there's no way they can top last quarter. And then they do. And I'm like, at some point they won't. But
Roy looks younger. His decision on PayPal is easier.
So they made my decision very easy today. What I was afraid of is it would be kind of unclear if the thesis was broken. No, it was very clear.
I didn't read that before I put that up. What are you going to do with your SoFi puts? Probably roll them or let them get assigned. But if I do roll them, I'm probably going to roll them for A, liquidity reasons, and B, at the same strike price. Did Alex Chris get sacked for not having an interview with Roy? Yes. Which company would be your top pick if you had to go 100% into one company over the next 5 years?
Probably Nvidia.
Wow. Really?
It's got to be something in the Mag 7 or that's like on the outside, like an AVGO. It can't be something that has in Palantir, like as amazing as it is. If it's 10 years, I might do Palantir, but 5, I don't know. What about you?
I don't know, man. I think if we're limiting it to Mag 7, I might pick, I don't know. Nvidia, I think, is a good one. Maybe Meta is also a good one. Like I see them being a juggernaut, especially with that capex. Like, dude, I think SoFi's got a good shot. $22 with the earnings that they put up. I think it's like I said to TJ earlier today. Like I view them as like treasury bonds, man. Like they're so safe in my mind because I know what their trajectory is going to be. What bumped Zeta up for you, Roy?
So I won't say specifically what it is, but I'll say it's a conversation that I had after the after hours with Steve. He was whispering sweet nothings about Zeta in my ear. And I'm like, it's pretty interesting. He's in.
Yep, that's fair. PayPal getting a takeover from Apple or Google? Just a yes, no.
Probably not, but could be.
What stock has been your biggest mistake? I mean, since we talked about Palantir, I'll go with that. Definitely my biggest mistake in terms of should have stayed in. It was a super small position that I had, and I was like, frig it, I'll cut it. I've done that with more names, but that one, honestly, man, like it didn't really hurt when they were at $200. I think it hurts more now at 150. Like just looking at that earnings. Roy?
PayPal. Because the sizing.
Yeah. Question for Roy. What did you hear recently about Zeta to make you? I think you answered this. Yeah. Unless you want to add more.
I won't go into specifics, but yeah.
Elijah says, how was the New York City meetup? It was amazing. Love talking with all of you. My voice was gone by the end of that night. But really, really fun meetup. And it was big, and it just made me like want to work harder, honestly. I think they're only going to get bigger from here, and that's very exciting. And Roy, you need to be at the next one. Yeah, Nate was there. I met Nate in person. He's way more freaking jacked and tall than you would have thought. Yeah. Screw PayPal. Here's the real question. Are we buying ETH? Yes. I have been thinking about this actively of buying ETH right now.
Yeah, I don't know if we're heading to a crypto winter or not. Like it's weird what's going. And I know it's a risk off environment. I bought some earlier this year. I haven't since then. I would have to think about it. Like long term, I think it's easy, but
yeah. Is it true BMNR is buying a 5% stake in Toys R Us or 2x the company's value to promote? I've never heard that. I think this might be sarcasm, but I'm not.
It's sarcasm.
Sure. Okay, great. Thanks. I'm too autistic for this shit. Who do you think are candidates to buy out PayPal? What about Meta? Can't they use a payment system of their own?
No,
Maybe.
I mean, like they did have a historically close relationship with PayPal under Dan Schulman. It's not been nearly as close since then. And they don't, unlike Apple and Google, which have their own payment product, which is scaling. Meta doesn't. I mean, they have MetaPay, but it's not a real thing. Nah, they don't need it.
Would it make sense for SoFi to acquire Novo? I'm not sure. I know. I know. What's his face? Kyle posted around SoFi acquiring Webull, and I said, "Look, I don't think they're going to acquire either." I said eToro is probably the better bang for the buck because it's cheaper. Yeah, but I said I don't think they're going to acquire either. So TBD. I don't know. I don't work for SoFi, and I don't know much about Novo, so it's pretty much a non-answer on my part. Roy?
Yeah, public makes a lot more sense.
Public, yeah.
We talked about that Friday.
We'll see what their valuation is. What's your cost? If you want to share this, you don't have to.
I think it was 68. So, and I sold at 40, 45 something. So, yeah. Options too. Like the options they were a smaller part of the portfolio for PayPal, but I mean, they still were down massively and they were conservative.
TD, what if they dropped SoFi down below us? And honestly, it is a concern because if they don't meet the market cap requirements anymore because they've dropped so much, then all of a sudden, S&P 500 is not going to be, on the cards for March, let's say. So we want to rebound in SoFi here for sure to keep them eligible for the index. The other thing to keep in mind is like the further, like the more buffer that they build in their requirements, the better that's going to be for them from a committee perspective.
Yeah, no, I don't disagree though. We did see 2 quarters ago a lot, maybe it's 3 now, a lot of companies that were just barely over the market cap limit and they got in. So just barely over is still over and they're fine with that. And they don't care if the market brings it under. So I don't think that's an issue. I think it's a coin flip this time and it's happening this year.
Yep. Okay. Next question is from Pedro. Says, what's your time horizon on Nebius? 3 to 5 years? Yes. 3 to 5 years. I mean, look, I want to see, in an ideal case, I want to see Nebius go into the net income profitability stage and see how sustainable that is. But yeah, I think it's still early in the Nebius story. Roy, when lunch? Matt asks.
Yeah, hopefully second half of February. But yeah, they had a 2-for-1 special at our favorite place, Matt, if you're still watching. But it was like a 2-day thing. So.
How was the Mr. Beast investment accretive? Well, like I said before, I think it gives retail investors exposure to invest in the career trajectory of Mr. Beast, if nothing else. I think the upside is like obviously future collaborations and if they want to do partnerships, and also not to mention that all moonshots further divest them away from Ethereum, and that's good because it allows them to still command a premium to the NAV, right? If you think, oh, Mr. Beast has a lot of growth ahead, that should have a premium, you would associate that to BMNR. That's just the sort of off the top benefits, Roy.
I think it's important to note what they're calling this is a moonshot project. It's their second. What that means is not like it might add 10% to whatever. It's like good chance it does nothing or goes to nothing. But there's also a chance, even though it's not a high chance, that it does a like 50x of whatever we put in. That's a moonshot.
Okay, let's okay. Hi guys, also Big and Nebius. You guys are buying hymns again at these levels, and I think somebody else asked, are we adding to hymns? It's getting wrecked.
Yeah, I mean, my positions. Go ahead.
Yeah, for me, I just want to wait until earnings, and then that's going to serve as confirmation for me to either add or keep my position as is, or even cut it altogether. So it really depends entirely on this earnings.
Yeah, I could go either way in earnings. Like you, I'm waiting for more information. I'd already cut like at significantly higher levels, and like if my remaining HIMS position goes to 0, I've still made money on HIMS, which is great, but a good bit. I could see myself going either way with earnings. I still think it's probably a second half play, but I mean, there's a chance that the thesis just continues to get significantly weaker execution. There's been some missteps. This is Q&A. I don't want to like do a deep thing, and we've talked about it before. I think that quarter is going to give us all the read that we need. If we see some of the similar yellow flags, I'll be, well, I guess, cutting my losses in there, taking my gains really, because it did very well. But you know, when a thesis changes, I get out.
Okay, next question. Thoughts on Uber? Do you have any?
It's a really good company, and I think there's multiple winners. Like the narrative that Tesla was going to eat it alive, or Waymo, it never made sense, especially Waymo. Like, give me a break. They're partners. So, but I don't know. It's one of those where it's a good company, but I think that there's better opportunities. But if you want like just a compounder long term, that's probably a good one.
Yep, that's a good answer. VG $15 longest date. I don't know what this is.
I did January 2027, so not as long as I typically do, but I think that there's like it's a long-term play for me. The shares, I'm not planning to sell those anytime soon. This is, you can more think of it as a swing position on top of my trade. Yeah.
Okay. Did you have a chance to look at PSTG? Took a position today. Very intriguing company. Hardware as a service. Super fast story. I haven't looked at it, Amit, but I definitely will add it to the list of companies. Roy, do you know anything about this one?
No, I don't. I've never even heard of it. I don't think so. Yeah. I mean, there's a lot of companies out there, so it's not like too crazy, but yeah. Yeah, there's another one that somebody mentioned too, which you don't have to comment up. It was Kraken Robotics, which apparently has some sort of partnership with Anduril. So I'm like, well, let me look into that. It's interesting.
Yeah. Thank you, Josh, for the $5, especially in these difficult times when SOFA's at $22. Saying Roy sells PayPal, the bottom is in, and Josh intends to buy Leaps. Definitely don't disagree with that at all.
Yeah, Josh has made himself a lot of money. He's a very patient investor, and patient in PayPal at this valuation, it's probably going to be okay.
Yeah.
Not great, but okay.
I heard about the rumor with SoFi loan platform business with Chase. I have not heard about that rumor. That would be very bullish, though. If that did come out and they name drop Chase, I think that'd be very bullish.
Yeah.
Express Investing, thank you for the $10. Thanks for your time. Really appreciate you, and congrats on the early retirement, man. Retiring in your 40s and just playing golf is something we all aspire to do, even though I'm pretty shit at the golf course. So congratulations, you enjoy it, and thank you so much for supporting. Go ahead, Roy.
I don't remember what I was going to say. Sorry.
JP Morgan.
What was the prior question?
JPM and SoFi LPV deal.
Oh, yeah, I hadn't heard that. I did see the massive price target upgrade, which was interesting today on SoFi. But yeah, I mean, like you look at the analyst reaction, it's weird, Tevis. Maybe we'll talk more about this on Friday. I'm sure that we will. But it was mixed. Like half of them were like, dude, this is a blowout quarter, buy the dip. The William Blair guy, Louis De Palma. And then the other half were like, we'll lower the price target. They're like, lower? Oh, did you not listen? Did you not pay attention? Okay, but I don't know how you could. How could you look at that earnings, have a price target already at whatever, and lower it from that? Like, unless you're like, oh, the United States is going in recession or something. None of them said that. So, just silly analysts. There's always some.
Thomas, not a question. Thomas says, hey guys, joined late, but I'm literally watching you on a flight across the country for business right now. Feels wild that this is possible. Yeah, long XAI and SpaceX, which we didn't talk about. Sorry for the PayPal situation, Roy. And Tevis, thank you for the BMNR update. Thank you, Thomas. And I hope you're annoying everybody who's sitting in the row beside you. We're going to wrap it up here, guys, in the next few minutes. Any updates on the wheel tracker? Yeah, I think we're going to be pushing out our launch date to better get product market fit. We rolled it out to a beta group of people that are trying it. Roy is among that group. And there's still some features that we want to make sure that we include in the rollout. So we're going to push it out. I mean, I think for me, like, you only get one chance to make a good first impression. And I definitely want to do that. So better to take a little bit of extra time and actually do it right than just rush something. Are you guys interested in memory names? Seems like a good opportunity, but also scary. Roy?
So back in October, during earnings, Air Test Systems basically called out, you have to read between the lines, but he talked about what was happening in the memory space well before it became extremely common public knowledge. Like, people knew and things were already happening, but Micron, essentially, he didn't say by name or anything. He was like, as clear as he could be, like, buy naked call options on Micron. Not quite. I didn't listen. I made a post there. I'm like, maybe it's time to really start thinking about Micron seriously, just because of what's happening in the space. And it's not just Micron. Like, the demand is insane. So my bet on memory names is Air Test Systems, because they also provide testing for that product. Massive gold rush. Well, one of the biggest issues with memory right now, there's two. There's been two, really, for over the last year. One is DRAM. Jensen Huang and NVIDIA commented on this back April or May last year. It's been a little while, where they needed a lot more verified stacks of DRAM that had gone through proper testing, because the cost of failure is so ridiculously high. And then the other part is throughput. That is, as you're manufacturing these, you have to test them, but a lot of the testing comes further downstream, where it's less efficient, it's more costly to do. And then when you have a failed part, you're throwing out a lot more than before. So Air Test Systems moves. There's a couple different test things, but anyway, they move all the way up to the wafer level. That massively increases throughput. At the same time, it's saving them a lot of money. I think it's inevitable. It does take some time to make that shift. And usually it's not in that product line, but in a future product line when that's considered. But it wouldn't surprise me if they see some sort of deal related to that either later this year or early next year. So yeah, that's just how I'm playing it.
Jared says Tevis is ready for his Thai food. I can see it in his eyes. And yes, I definitely am ready for that. Thank you, Roy, for taking the hard question for me. Any other positions that you're adding after talking with folks at the New York City meetup? No, but what I will say is Tanner and I talked quite a bit about Wix, because Manuel is doing a lot of research around Wix being the new position based on base 44's growth. And I think it's really compelling. So I think we're going to have Manuel on the stock tank to talk about it. And that could be a position, man. Like, I think Wix is down 7% today. Roy, I know your favorite Cloudflare is also down today, so we can talk about that at some point. But yeah, those are the main ones, at least for me. Figma too at $21. Holy, that could be good as well.
Those are all interesting to me. ServiceNow, which is a larger than these, but in the enterprise space, like, that's also interesting. Not enough probably for me to even investigate. Wix, I think a little bit more so, but yeah, and hopefully we'll get to talk to Manuel more about that soon. So
yeah, Michael, I think next is going to be a multi-year play. It can stay depressed for quite a while, but really the thesis for next is not going to materialize until probably like 2027. I don't know nearly as much as somebody like Matt Money or Chris Patel on Cash Flow Chronicles, so definitely follow them. But yeah, it's a sit and wait type of play, because they're they're
revenue, or yeah,
they're not even operational right now.
Yeah.
Any Shift 4 commentary? Way too cheap. look, all the thing I will say one thing about Shift 4, then I'm out of here. I promise. When we literally were at the airport paying for a coffee, Tanner asked our freaking waiter if that was a Shift 4 terminal in his hand. The guy walks around with a Shift 4 backpack, and I think that's all you need to know about your investment in Shift 4. Invest at your own peril.
Yeah, honestly, payments is not a place that I want to be in. They're a good company. Don't get me wrong. A lot of their growth and strategy has been through mergers and acquisitions. That's not a bad thing necessarily, but it's not organic growth. And there's a reason why, if you look at estimates for next year, now we'll see what they say as far as guidance and everything. But they're expecting a slowdown. So that's not great.
Yes. Jared can sense it. Tevis is getting hangry, and I am, and I love you guys, and I don't want you guys to see that side of me. So we will wrap it up there. Thank you so much, everybody, for tuning in to the bootleg. Oh my gosh, Josh, $10 to Roy. Thank you.
Thank you, Josh.
Great time to think about one of those Warren Buffett's most famous quotes. It seems as though Josh is getting more and more bullish on PayPal. That could be interesting. Josh, let us know. And that's it. I think Kryptonite, you asked a question that is NSFW, especially right before me having some food. And yeah, I'm not going to throw it up on screen. Thank you, everybody, for watching Bootleg Weekly. I freaking missed you guys. And thank you for the people that I met in New York City. And we're going to be back next week at 6 p.m. And Roy, any last words?
Yeah, thank you guys. You as a community, you make this a whole lot of fun. I still enjoy talking with Tevis, just one-on-one, but yeah, you guys really make this one of the highlights of my week, I'll say.
And Caleb, I will not forget your name again. Reduce your positions, and you're going to do fine. This kid is so far ahead of where I was at 20, man. It's insane. Anyways, okay, goodbye.